I'm Guillermo, or known as the Chief Trading Pilot at optionstradingpilot.com. Welcome. We've had an exciting couple of weeks. We anticipate more excitement coming up. So I'm going to jump right in and show you what we're looking at, some of the trades that we're thinking about, and generally the idea. I know there's some earnings that are out there coming up. Nike is one of them. So we'll take a look at a couple of those, but we're not going to concentrate. We're going to concentrate more about meta strategies, the end of the year, more about preparing. Let's see if we do have a down market, how you would play it. So this took me a lot of years to learn. So I'm going to share a few of those ideas, and if you want more, you can join our Discord. We can talk more about it there, or contact us at optionstradingpilot.com. My cohort, John, is with family this week, so I'm going to be taking over doing this. So we're just going to do it a little bit differently than I usually do, which is looking at different markets. But I'm going to go big picture, little picture, and then talk really big picture. So don't want to take too long, make this video too long, but here we go. Okay, so where are we on the SPY, right? The SPY is really important. You can see, let me share this screen. It doesn't look like I'm not sharing it yet, but let me bring it here. Here we go. Share screen. Where do we share the screen? Here we go. Share screen. Okay. So here we are, right? This is the SPY. Notice the amount of volatility. Look at the size of this candle and this candles, all these candles, right? These are really difficult to trade. And why is that? It'd be nice if it starts here and just heads down, right? But what happens is that it goes up and down during the whole day. And just kind of give you a little brief picture of what that looks like. Let me show you. One of my favorite setups to trade right here, right? It's like this market structure type looking thing, right? We're looking at the pivot points, and these pivot points are basically the average daily range, and what happened the previous day gets told what happens the next day. You can see we have a thin range and it's bearish, so we're already at minus 0.97 for the evening on futures. I'm shooting at like 12 at midnight, so Eastern Standard Time. Whenever we see a thin range like that, we would anticipate it to have trend hard. That's a high probability event for the next day, but we've already dropped quite a bit. So how much further can it go? That's always the question. So obviously we're bearish now. This 513, which I really like to use it as kind of like my guideline of where we are in the market. We didn't get much of a bounce. We had this gap up day, and then you can see like it's just stood still, right? You know, it's like it really hasn't done much, you know, stayed within, and then we got the big candle and then the big gap down. So this price action right here with such a big candle and such big volume, probably should have played it safely, right, for the next day. And here's what happened the next day. And so tomorrow we're going to be down here somewhere. Where are we? 556. So right around here, we should be gapping down here sometime. So very interesting times. I'll caution you, right? Like probably a good time to not be trading. I'm going to tell you that much. And why do I say that? Well, it's the end of the year. We see a lot of volatility. Just take some some short-term puts, some DTEs that way. Maybe some of these stocks that you can really find and come up on your scanners. And if you want to know about scanners and alerts, then you've come to the right place. I won't be discussing those here, but that's really, I think, that's where the rubber meets the road for traders. I think a lot of people really focus on so many areas, but if you have a proper scanner and it's set up nicely, it's almost as if you're increasing your odds for free to trade, right? So some of those things are really important. And then setting up those scanners, and then knowing how to trade those scanners, right? Like I have different ways. Like I have a stock charts script that I use that really tells me, hey, this is a good bull put probability. Oh, this is a good bear call probability. Oh, this is good iron condor, and there's XYZ reasons for it. And then there's other ones, right, that I use as like, hey, this is bouncing off this Fibonacci line, or this is right at the volume profile extreme that you like to trade, you know, that type of stuff. So you already are getting some good ideas there. But again, is narrowing your search, like narrowing the things that you're good at, like really learn how to pick what you want to trade. And really a lot of it has to do with your personality. So I like credit spreads a lot. And the reason is because I can be wrong and still win. So who else doesn't want that? Obviously the win per trade is smaller. And so then I supplement that with nice scalping ideas, and I'll hold some trades for a few minutes to a couple hours. And then there's every now and then I try to get into a multi-day trade, a little swing trading. I like swing trading. If you're right, it really hits nicely. And, you know, obviously the probability to win those is lower than the credit spreads that I like to use. But, and then the scalping, because you have more control, right? You're like, hey, I'm going to win this money today, or make this money. So anyway, 30,000 foot view, right? It's like SPY, we're in bearish territory. Let's take a look at the QQQ. Even crazier, right? It's already been negative. We should anticipate it more negative. So the futures are also very negative. So that kind of hurts your feelings if you're long, right? And Q is the micro futures. Yeah, it's at minus 1.05 for the day. It's sitting right at the pivot, bottom part of the range on the pivot. You know, if you want to get into this trade for the QQQ and you're in futures, we're awaiting hitting a point of 15,733. 15,733. You probably will get this video after that happens, unfortunately. But just know that that's the high point in the late hours right now. Is that number, is that pivot point. And if it does do that, and you really would want to buy a put on those. And then for the MES, I am looking at 45.8912. If it hits that point, it'd be really a good entry point on selling some futures. That doesn't directly translate to SPY puts, but it's close enough, so you'd have to look at that. We won't see those numbers. Let's see if it pulls up the SPY. So the SPY number looks like it'd be 4. What time is this? 3:55. Okay. Yeah, these we'll have to look at it tomorrow morning. You can see like it started to form some here, but 460 maybe. Anyway, it's better if we follow the futures for now. We'll wait what happens tomorrow. But again, thinning range, we should anticipate a big move. Okay. I am just curious. I want to see what's happening with new share. We're still here. Yeah. NKE been heading down, which means that it's probably going to go bullish, right? So if you're just reading this chart, just so you know, right? Just looking at the daily, it had a wild upswing. It gapped up, right? It looked like it was going to come all the way down to this gap to backfill this gap, and it didn't. It stopped. It arrested, and it made a very strong move forward. Now, we would anticipate this downtrend to be coming, right? But the earnings are here almost. Let's see. Okay. Yeah. Yeah, the earnings are coming. So, look, I'll be candid, like Nike, I have no idea what is that high. And why do I say that? What's this shoes and clothing, right? Personally, I don't value that stuff too much. I like the stock a lot, actually, but I'm not a clothing guy, I'm not a shoe guy. But what I'm saying is that this stuff is happening. A lot of it is like you have to look at the demographic that likes that stuff and where they're getting their money from. And so there's been a lot of stimulus. So we've seen this gap up. So sales from Nike are really strong, right? And so it's Christmas time. A lot of gift buying. I'm just looking at Meta and it's driving down. And so what I've noticed through my experience is that if we want a strong move up, some people get in early. So they want to shake those people out to get the strong move up. So that's how you get rid of, I call it clearing the pathway, right? If you want stuff to go down, you got to get the weak hands out. And the weak hands, they set stops along the way. Think of those as barriers from having a good flow up. So what happens is the powers that be will drive the price down to clear those puts. So I personally, I would probably, or I am going to play this with some a bull put, and then maybe some out of the money calls. Let me share that to see what that looks like now. That doesn't mean this is the case right now. So here's Nike. Yeah. So let's say that January 22nd, the NIV is 43.41. That's a 17-point move. So we subtract 17 from 161. That puts us at 147. So 147, you could see is real close to the low for the, it's real close for the low, which was at 144.11. So 147 puts us here. You can see that we are halfway down on this Fibonacci. We could probably set it right here at 151. We'd make more premium at 151, 52 because that's the Fibonacci. Notice that we are here. So let's look at what the premiums are paying. So the expected move is 147, and the Fibonacci line is a little above that, and it's below that, one of the peaks of the volume profile. Those are key things you want to learn more about that we can talk about at 152 or 147. Obviously, we'll get paid more at 152. So let's take a look at here. So we have the options are 150 or 145. Bull put, let's say vertical. There we go, 63. And our risk is 437. It's not bad. Not great, but not bad. How about the 150? Just five point spreads. $34, 406. So for 30, what was that? $35 more dollars. I don't know. I think I'd rather 145 just for safety. Yeah, I'll probably go 145, 140 on that. And then if we do anticipate a 17-point move, right? We're at 161. What's the 10, 71 plus? So we're at 178. So it's at 175 calls at 241, a little expensive. But the 17 delta, say like 150, yeah, I'll probably hit those. So I would probably sell. Here's how I'm probably going to go with this. It's a little risky because we're double dipping. I will probably sell two calls. I mean, two bull puts, and that will fund most of one of my calls here. So for every two bull puts that I sell, I'm going to buy one call at 180. So you could do it that way. Another way to do it is to be more in the money on the bull puts and take more risk, but I don't like that ratio. It's too much danger sometimes. So anyway, that's the short of it. I'm not really gearing to do a heavy trading week. Have family in town, Christmas time. Merry Christmas, everybody. So that's basically 30,000 foot view. I did want to talk about something that's really important, near and dear to my heart, that I think everybody should be aware of how to get out of the way. You know, one of the things that I talk to people about in my profession is that, and now we're talking about investor money, not trader money. So sorry, I'm going to switch gears here for a second, but okay, investor money. Do you have a way to get out of the way if the market's crashing? I have friends that lost a ton of money in 2000. I have friends that lost a ton of money in 2008. And so I worked a lot to come up with a way to avoid that, right? I'm not saying you're not going to lose. Okay. I don't have a magic ball, right? What I'm saying is, if the odds are greater that you're going to lose a lot of money than normal, then maybe you should work out a way to get out of the way, right? So let me show you something here. This was the last time that I got out of the way. And when I say that is from like the market really crashing. Fortunately, that in 2020, it wasn't a big deal. But look at this. This is a nice time. We get out of the way. Look, the 513 is an easy one. I have complicated algorithms that do a lot of stuff for me, but you can use this 513 and cross this down, get out of the way, just stay more cash, right? You can even go a little negative, but for the most part, just stay cash. And then let me show you something that's really awesome. That's very important. So this is something, reading a lot, understanding a lot of things, obviously. Most people are familiar with Fibonacci retracements, but if you're not, it's just basically rooted on the idea that there's some golden numbers, golden ratios, there's some, order in the middle of chaos. And one of these orders that you find is this Italian mathematician, last name Fibonacci, found a sequence of numbers that you just add the previous number to it, and then it goes from there. And so that's the beginning of where this comes from. Okay, what does it matter? Well, it just tends to happen that traders listen to it. So guess what? It becomes a reality. It might actually just become a reality because we're maybe built that way. But what I'm trying to say here is that if you measure where it crossed over to the low and you go to the 50% retracement and it fails, see how it failed? Then you will probably know we're in for it. So let's say we're early here, right? We're getting a gap down. We will probably see this similar thing tomorrow on the SPY. So notice a gap down. So we should anticipate more. Now what's been happening, right? Look, gap down, stays here, and it goes back up. This was 2020. This was 2020. Okay. So the Fed already said we're going to stop printing earlier in 2022. That's why we're seeing what we're seeing. But they haven't yet, right? They're still putting billions and billions of dollars per month where they have buying programs to support the price. But the market is always looking ahead 3 to 6 months. So in 3 to 6 months, guess what's going to happen? The Fed's going to stop printing, okay, or buying up the stock values. So we should act as if we're already at the point that we stop printing. So what do things look like? Well, obviously it's not perfect information. Not everybody thinks that way, and the actual buying will support the price some. But what does it have to do with the retracement? Well, the retracement mean that maybe if we get here, like if you did what I'm going to tell you here, you probably lost a little money, right? But that's okay. I'm not asking you to, that's not my recommendation. This is only for information. I want to tell you what I've done, and I'm sharing a little bit of my knowledge of this. Okay. Here, whenever we see these down, now look, that 5 AMA didn't cross down, right? So it's not exactly the same thing as this. Over here, it may be a little more true, right? And it did come down and you made a little money, and then the price action here. So how do you do this? Okay, you come here, you can buy some out of the money puts. Okay. I've done that. I do that. So buy some out of the money puts. Why? Because if it comes down, you make some money. But we should also not be surprised when we get retracement. Now, I'm not saying to put a ton of money here. Like I wouldn't. You can just stay cash. Just wait for the retracement, right? And so here, you see that 50% line, it just inched up. See, I thought the turn was here, back at this point. Right? I should have waited for the actual turn. I thought, given the price action, look, it tried to go up, it got rejected, and it came down. But then the next day it came strong. The bulls tried one more time. Just push it. I thought the failure. So I went puts here. So the next day I was down. I was down pretty badly, actually. But that's okay. Like It wasn't a one-day trade for me. This is a multi-day trade. I have to wait multiple days and well within the boundaries of what I said that I'm willing to lose on this trade. So again, trading with a plan, right? So boom, look, lose money the next day, we make some money back, and the next day we make money, and then we make real money. See that? It comes back up. Notice another slight retracement, same thing, another slight retracement, same thing. And so it's just boom, 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 boom. So get familiar with that. Like it's the way it works. Like weak hands, oh, retracement, kill the weak hands. Okay, we kill them, go back down. Kill the weak hands, kill them, go back up. Kill the weak hands. Boom, boom, boom. This happens. You might be anticipating this, but then you get this. Here, you should reduce your, your position on the bearish positions. You should probably get out, right? Now notice this is not going back up to 50%, so you're still feeling bearish, still feeling it. But we have 2 days in a row up with high volume. Now, this specific formation is not very inspiring, but knowing from experience, I'm going to tell you, once you've made so much money, you should take profits, okay? And see what things look like. Like you've done pretty well. So here we go. You should probably be out right around here. You should be. Definitely get your out by here. You still made all this. So you should definitely be out here. And at this point, you're waiting for the crossover. And it happens here. You get in, and then boom, they pull a rug from under you. So you get out again. And then guess what? You're still out. You might actually think that we're going one more leg now. If you're aggressive, like I'm known to be every now and then, you would take some small shorts here. And guess what? You lose. And this candle, it's, bullish engulfing. So again, memorize these things. All right, memorize these patterns. So boom, boom, up, upswing. It crossed over. Once it crossed over, you should be long. So we're in. Yeah, I don't know if it crossed over there. I don't remember. This is 2020. All right. So long story short is have a plan to get out of the way when the market does drop. Have a system. Set it up now. Okay. I give you one idea. I use the 513 on the SPY. I back tested that. It's solid for me. Some people don't like it. That's okay. All right, I hope that helps. I know we didn't go into heavy stuff. I should probably do one mention on oil just because it's been going a little crazy. Share. Sure. Last time I looked at it, was down, and wow, down 2.33 points, 3.29%. Oh, that's hurtful. Okay. So oil's going down. They don't expect people to travel. I think that's where it's stemming from. I don't know what the supplies were. The price action is really negative. So get out of the way. Anyway, again, subscribe, like us, come join us on our Discord. You can find us on www.optionstradingpilot.com. We welcome you. Come ask us questions. You guys have a good night.